Hi guys, it's CryptoBirb agent speaking. Welcome to today's Friday webinar. Well, Bitcoin has been put in some sort of like a frozen mode, stagnation, while equities have been pretty much tanking throughout the entire week ever since the week open. And well, we are going to discuss this and more and how it all kind of like correlates all together to come up with certain conclusive terms, what we can expect for the next days and weeks to come. If you guys are ready, make sure to stay tuned. We are going there right in a second. Welcome. What is going on, everybody? Please let me know how you guys are feeling today in the comments. Magic. Hi, everybody from Tenerife. Of all the best love to Tenerife. Nels is saying kick butt this weekend, folks. It is indeed very good time. Emir saying evening bird from sunny cool Istanbul. Much loves to our Turkish friends out there. Love you guys, everybody. And well, of course, I usually say there's a lot going on throughout the weekend, but this is not the case, to be honest, this time. And Bitcoin has been put in this form of a stagnation, right? You're looking at lots of sideways movement that doesn't really conclude towards or resolve towards either side, while equities haven't been helpful at all to Bitcoin and to other cryptocurrency assets. And well, I'm here to actually discuss this and more. Switzerland's Zurich from Martin Janex, J Jan X. I don't know if this is sounds a little bit like if it was Polish. I have from Canada, Norbert Pozdrowienias, UK. All the best love and greetings to UK. Yeah, this is supposed to be a round of a quick market check, market vibe analysis, throughout what's been going on throughout the week. And before we, of course, go to the charts, I want to make sure, guys, you are well notified in terms of what is coming up in the next days ahead. Well, in all honesty, I'm looking right now at the Federal Reserve calendar. Right, let's put it straight away. We're looking at the FOMC meeting, which is coming next. On 4th of May, if I'm not mistaken, the press conference, 2 p.m. Eastern time. To the best of my memory, it is, which should be, as far as I'm concerned, 8 p.m. 9 or 7 or 8 p.m. Jesus, I'm always confused with the daylight saving. One way or another, 2 p.m. It does sound EST here, Eastern time, for the FOMC meeting, which is going to be definitely including lots of essential, I should say, expectations in terms of course, that there are plans for the rate hikes, whether there's supposed to be some tightening to their prior monetary policy already tight, whether the hawkish thoughts, hawkish privilege, I should say, is going to be maintained within the market. And well, other than this, you can tell that there is some sort of like a trader's expectations being put per the comments here. Well, for traders begin pricing in a possible Fed 75 basis points increase in June, right? This is something towards which I think the Fed and then Jay Powell in a recent speech has been sort of like preparing us in the FOMC minutes, if I'm not mistaken, recently, as in, raising the awareness or caution ahead of potential tightening, even tighter policy with instead of 50 basis points increase to 75 basis points, right? This typically had already, I think, would already be discounted by the market, because the market typically discounts the the anticipation towards the news rather than the news itself, and the news itself tends to become either a little of a surprise, or if it's a positive surprise, then the markets tend to react way better than expected. So I saw my good friend Ted, who's actually also commenting on that, saying that on Twitter, arguing that potentially this may be the by the news, by the rumor, by the FOMC meeting time for cryptos. We shall see. Regardless of that, I was right. It does seem this way that as long as the Fed is actually going to hike the rates not by 75 bps but actually 50 bps, this could be a significant, I think, surprise to the market, as the vast majority expect larger tightening and greater tightening. So if it comes a little bit easier for the market with a little bit more ease, this could be taken as a more of a positive trigger to the markets, right? I hope everybody just catches up so far. There are people joining out. Okay, hi from Canada, Claire Paulin. Always nice to see you here. And well, if we go and see how the markets have been reacting so far throughout the week, you can see there's been a lot of selling pressure, a lot of selling off in the very recent days, right? And after a successful, I should say, breakout locally out of this, bull flag pattern, if you will, there was a breakout, and then the breakout kicked in or kicked off with another sell-off session. Selling pressures coming after the FOMC commentary from Jay Powell about the rumors, with people in market passing on the rumors that there's going to be tighter policy. So all that being said, is definitely there's been a lot of chop. You can tell there was a downside breakout, which was a failure. There was an upside breakout, which was a failure. Lower highs, higher lows. Lower lows, higher highs, and still nothing concludes out of it, right? Instead, we get chop as a result. Some people could argue there is some inverse head and shoulders pattern, of course, but please note that this pattern is not complete. The right shoulder is not a right shoulder. It's not complete. The right shoulder can only be called a right shoulder when it truly is a right shoulder, and when it breaks usually through the neckline, then you get some sort of like a breakout retest, touch and go, kind of like a setup. And if it holds the support instead of failing below, then then the market clearly is technically ready for pressing higher. Until then, or until that happens, I'd argue the market is in a lot of indecision, a lot of weakness, and a lot of trouble and danger of potential sell-offs coming further down the way. We shall see, like I said, if there is some sort of like a positive surprise coming with the FOMC meeting next week. I would argue this could be more of a positive instance. And so far the mean reverting kind of like techniques would get you in a brief kind of like a rectangle box here between 33,000 and 34,000 points for the Dow Jones Industrials. We are definitely looking at bonds weakness. The 30-year bonds, are continuing, the decrease for the price. Very, very much struggling to hold well the 140 points here for the support. Of course, this correlates with inverse movements, with the opposite negative movement in terms of the direction. For the yields, 30-year yields basically pressing towards the long unseen, long unvisited resistance at around 3% there. And in case you guys missed, there has been recently a breakout on that 42-year long downwards trend maintained over the 10-year treasury notes yields. To be specific, 42 years, right? Ever since 1980, the trend to the downside has been established, and we are looking at a once-in-generation event. Earlier this week, I actually paid a visit to Scott Melker's show to discuss this very instance and how rare and how uncommon situation we are right now in, right? The 42-year long breakout, think about it, right? It doesn't happen too often. It happens basically once in 42 years so far, right? Per the latest records. So I would argue we're looking at so much of the dark clouds ahead. The specter of that basically recession on the horizon somewhere out there with the inverted yield curves, where the short-term rates actually bring better yields than the longer-term yields. This is pretty strange, and typically brings the calls for recession to 6 to 9 months usually in advance, because 6 to 9 months is the average length and distance in time on the X scale, the time scale, if you will, between the financial peak cycle and the economic business peak cycle, where the recession kicks in. Um, I do believe that with all that being said, you're looking at a very strong reaction from the dollar side, of course, right? The dollar has broken out very recently as it was stepping into off March and into April. You're looking at a rectangle clear range pattern, kind of like a breakout, which did manage to hold to hold the freshly broken resistance turned into support based on the polarity change textbook principles. With a touch and go retest actually successfully held out there, bounced off the short term average. See how vertical the price action of dollar index has been going off. It's been literally lifting off vertically, right? And this vertical movement is vertical movement is where the money moves, right? The money moves the market, and the more vertical the movement is, the more money is moving within the same market. So I would never ever in my life try to step against it, position myself against such a powerful trend. uh, you know it's definitely some sort of like a not the most positive reaction, I should say, to equities. Not the safest environment for equities or for Bitcoin to grow. But the strength of dollars is very much surprising to me, or amazing to say the least. So all that being said, we're looking, of course, at a lot of struggle, at a lot of tumble going on the equity side. Just like I said, composite index, which is some sort of like a risk appetite barometer, after successful breakout to the upside, where we would expect that things were going pretty well. The FOMC meeting minutes, comments and rumors actually stepped in and kicked in, and you basically looked at a continuous sell-off throughout the days, okay, of the past weeks, rejection of the freshly created resistance of the moving averages. So mean reversion completed, but the market didn't manage to hold the lows out there, just as if it did for Head and Shoulders, right? So this is an example that if you were attempting to long it prematurely before the pattern shapes for this inverse Head and Shoulders, then you basically are already underwater, right? Because you would have longed in here expecting for the second shoulder to form, but instead it tends more often than not to counter trade, or I should say, put the early colors in failure, basically, right? People tend to short or trade patterns, force patterns where they don't even exist. There was no Head and Shoulders pattern, and people who would have thought of it as an inverse Head and Shoulder would probably long this, and the result is now they would be underwater. So another bearish crossover to the downside of the short-term average, which is the 20-day average, crossing over 50-day average, which is the medium term, to the downside. Definitely not the most positive outlook as we go. So far, it's been maintaining and trying to defend the lows out here in 12,500 points around approximately. We're looking at some breach with a lower low and some doji, kind of like a close or inverted hammer, sort of like a doji, long wave, high wave doji. It's not the most promising one. We got the nice bullish hammer, or something that looked at a close as a bullish hammer. I'm saying close because typically when you want to see a hammer candle, you want to make sure that the real body stands only for like 1/3 or 1/4 of the entire length of the candle, right? So you would watch the wick and the lower shadow to be, well, for a classical hammer to be like 2 or 3 times longer than the candle body itself. So I would be conservative about calling this a hammer pattern, but itself, I would take it as a more bullish than bearish. But one way or another, you're looking at a very contracted price action, very compressed price action, right? The candles which continue trading within its prior ranges. This is not, I should say, the most promising that it could get, because the market clearly struggles to push higher, and it instead kind of like forces traders to stay within well-defined short-term range with little to no conclusive movement, right? So overall, lots of dark clouds, lots of indecision, lots of fundamental indecision and threats, of course, going on. S&P 500, the large caps, similarly, kind of like even a bit stronger reaction to the upside, but then we got this even lower close, even lower gap to the downside, closing here, opening here, clear drawdown at the open. Not the most promising open you could get, especially with the weak closing, and the weak closing near the main support, let the support break both on the composites, and you can basically watch the market drawn feather. Otherwise, the positive news could come from the FOMC meeting next week. Some people are saying video is blurry. I think this may be due to your internet connection somehow. I'm not sure why that would be the case here, to be honest. One way or not, try to refresh maybe. This may depend also when you're watching that. If it's YouTube, if it's Twitter, one way or another, guys. Why don't we keep going through what we see in the commodities side, right? So the commodities side clearly right now are continuing its continuation. I should say consolidation pattern, maybe in a well-defined range between 136 points for the futures, commodity Bloomberg's futures, BCOM futures, and the lows of 115, if you will, having found somewhat of a support here at the 50-day moving average. The averages tend to work as support and resistance, as some dynamic support and resistance levels. First of all, because, of the statistical nature of the movements, whatever goes up, it must go down, and there's always some mean, some average value to it. So there is some mean reverting pattern, so that whenever the price action is heavily distorted or deviated against its mean, it means this is raising the potential momentum fade trade towards the in the opposite direction, fading the trend in the direction of the mean of the average. So technically, after this abandoned baby kind of like playing out evening star pattern, gap up, gap down with a small baby candle here in the middle, or a star, if you will. Following with a confirmation to the downside, break-in, gap down, and abandoned baby in the mirror version, right? The bullish abandoned baby and the morning star. So funny thing to observe how it works. Bearish pattern and the mirror version of a bullish pattern there. So far, somewhat of a bounce as well. I would argue that if there is no break below the average, we can continue consolidating or pressing higher. Commodities are in a strong bull market. It is out of question. See how this 50-month average, which is 4 or 5 years almost, average, just continues sloping upwards higher and higher with a little bit of more aggression each and every single time. The market accelerates to the upside. This is bullish. Of course, right now we're looking at some sort of like a tweezer top pattern, maybe where the resistance is double rejected. On the lower time frames, it will look like some potential, double top if it actually forms and breaks below the 150. Just like I said, we could see some lower retest of around hundreds, the prior regions of resistance, which should have flip to the support side, right? Clearly, after an insane rally, some resistance finally met here at the prior resistance. See how the technical analysis applies here 10 years earlier to the current price action almost, right? And all that actually connects to what I wanted to show to you guys with the correlation of Bitcoin, right? So looking at the correlation chart of Bitcoin, you're looking at a 7-week correlation coefficient at the bottom of the screen here. And the price action of Bitcoin in the longer term perspective continues trading within this large, insanely long chart pattern of higher highs and higher lows. $65,000 high April 21, 28,800 June, July 21, $69,000 early November 21, early 2022, $33,000 lows. We're somewhere at the verge of a potential breakdown of this ascending channel counter, being positioned counter to the prior trend, potentially bringing points towards a continuation into lower regions. Of course, that would not be the most bullish case you could get on Bitcoin, but it is what it is. Of course, my vote is still, of course, that eventually, at one point, sooner or later, we would break out somewhere over here to continue the bull run. Overall local slowdown, the 50-week average is actually slightly curving down steadily, slowly but surely, with a correlation coefficient being at historically high levels for a historically long time. You can tell, I would argue, that this is the longest time we had stayed here at these high levels of very high correlation, where Bitcoin tends to move exactly in the same direction as equities. As stocks go down, Bitcoin goes down. Stocks go up, Bitcoin reacts positively to it as well. And so far, you're looking at a very long period of such a 7-week basis correlation coefficient, with maximum range to the upside being limited at 1, plus 100, minus 100 is the perfect negative correlation, very rarely ever met. Usually, perfect correlation is possible only when you compare the same two assets. So what does it tell you? What does it mean? Well, this correlation study tells you that there's whenever there is such a strong glue and attachment of one market to another, you're looking at a market which is very, I should say, much not encouraging for Bitcoin, I would argue, right? Bitcoin tends to be, or should be, at least some form of a digital gold, right? So it should serve well when the market crashes. Gold is supposed to be, by definition, this form of an asset that protects your capital. It doesn't necessarily, as a gold, doesn't necessarily need to generate the biggest profits for you in the longer run. I think it's very clear that gold underperforms equities. Equities pushing 10x, 100x over the longer period of time, when gold staying relatively flat and stalled. But instead, when the equities crash, when the stock market crashes, you get gold protection. So Bitcoin, more often than not, tends to be, should be, is perceived as a sort of like a digital gold. And here's the surprise, because instead, for the past, I should say month at least, right? You're looking at a very, very high frozen levels of correlation, very high correlation, very strong correlation. The stronger, the more alliance in terms of the movements, the same directional alignment. Equities go up, Bitcoin goes up. This is 7-week correlation, so we're taking into a consideration 7-week of the price data, right? Not just a daily data. So one way or another, the way I look at it, of course, long-term perspective, is we have the wave up, corrective wave with the 2019 third wave, which is typically the strongest, some corrective wave which is overextended horizontally, I'd argue, with fourth wave being hovering somewhere in the middle levels. You can tell the market is directionless, despite it keeps making higher highs and higher lows, 65, 28, 800, 69, 33,000, higher highs and higher low sequence. There's so much of a slowdown on equity side, which negatively impacts overall performance of Bitcoin. But still, if you have a look at it this way, Bitcoin still tends to perform better than equities. Equities being down 18-20% composite index, when basically you're looking at a relatively better correlation, better market performance in terms of crypto being down like 30-40% maybe, when you have a look at Netflix, which is 70-80% down, or Facebook, which is truly huge loads down. So some equities, some tech equities, are definitely falling with no support, probably reaching towards like 80% of total retracement, which is pretty wild. And at the same time, Bitcoin actually, instead of 80% fall, did like minus 30% or something. Of course, it's barely any cheer up, but it's still performing not as bad as some equities do. On top of that, overall, you're looking at a very uncertain time, where the midterm election years, which is clearly 2022, belong to this group. midterm or election years tend to perform either flat on average or continue, or they tend to continue the bear market. So rarely ever midterm or election years are actually positive for equities, and hence as a result for Bitcoin as well, because it's all connected. Again, I would not be surprised to see such a range, such a volatile chop to continue for the next months. But eventually, I see so much of this fundamental pressures and the supply contraction with big institutions, big money, actually whales loading up somewhere in the overall extreme fear environment right now, that I see at least some upwards recovery coming to Bitcoin. I still, like I said, firmly believe Bitcoin is set to reach this $100,000 and past these regions. Ethereum $10,000 and higher, Litecoin $1,000 and higher, and so on and so forth. I know people hate me for it, but in all honesty, people hated me so badly when I was calling $3,000 market bottom for the bear market in January 2018, which is why so many people got paid attention to my account overall. Not many people know this. One way or another, the contrarian basis would argue that crowds are always wrong at extremes, and the more extreme fear it gets, the more of a buying opportunity it becomes. It doesn't time you the perfect bottom, but it tells that on average, if you buy into extreme fear over some time longer, sooner or later, you should be more profitable than those who actually sell into extreme fear. This is what the technical study and history shows and reveals. Having a look into the Berbigator Pro type of analysis here for Bitcoin, you can tell how clearly clueless Bitcoin has been. Even if we turn off, BPro, and if we press on the, basically the line chart, you can tell that there's no direction. There was some fair attempt to break through the main resistance of $46,000, but it faded along with the FOMC meeting, FOMC, minutes where the equities side also of the market also started collapsing. So it's all kind of like glued and connected. Well, of course, some people could argue that, this current pattern is like a tiny version of a wedge that was going on here. Maybe, I'm not the biggest fan of calling such patterns, that the fact that we would expect future to behave exactly like it did in the past isn't actually called, there is a saliency to it. There is some, behavioral bias, there is perception bias, there is representative bias, representativeness bias, if you will. No matter how we call that, it's a faulty reasoning. It's the past is never a guarantee of future performance. So just because the market printed such a pattern and broke out like to the upside last time, it doesn't mean that it necessarily needs to break out to the upside this time, right? So these assumptions are never your good ally. So all that back, if we take it back to the Berbigator Pro analysis, you can tell that the 12-hour chart remains more giving to the bearish side of the market, as in the bears are in control as long as the market keeps trading below the current time trailer on the 12-hour chart, my favorite time frame, with a stop at 41,684. This is the main resistance level that I want to see being breached to the upside and broken. And of course, having covered through the different market indexes for correlation, then you can expect that despite there is this strong divergence, this strong bullish divergence based on momentum indicators, which could technically push you higher eventually, you still want to see some, bare minimum kind of like of bullishness into it, right? So let this wedge contracting patterns finally break out to the upside, then let it reclaim this main resistance at 41,684, and that would make it bullish, as in the interpretation could be that the bulls regained the control there, right? The bulls are not in control at this moment. The bulls lost the control ever since breaking down below $45,000, which confirmed this fake out pattern. And instead, the market continues and has remained to be under the control and influence of the bearish forces and the sell-off. Regardless of that, we're moving, while the bears are control, we're moving in a sideways pattern, right? There's such an amount of chaos in here. There is no well, virtually little to no direction. There is some sequence of, well, lows, highs, lower highs, lower highs, lower lows here, higher highs, lower lows, lower highs. There's such a chop. It doesn't come up with any consequence to it, right? It doesn't favor any direction whatsoever, other than the downwards pressure on the shorter time frames, which I'm not the biggest fan of, because eventually, um, eventually there's so much of indecision in the markets that I would not really go and dive into like 15-minute charts and go and ditch and trade it on leverage. I'm not the biggest fan of it. Right, so strong divergence, which tells the market is overextended to the downside. It's reaching its due potential for the reversal, upwards reversal anytime soon. But whether it happens right now of these levels, or it continues a bit lower into toward like mid $30,000 or even lower, and then it reverses to continue even with even stronger bullish reversal divergence. One or another, I still want the market to reclaim with a bullish close through daily or weekly close above 41,684. This would make me more certain that the bulls regain the upper vote and the upper hand in the market, with potentially rebuilding somewhat of a momentum to the upside. And other than this, if we go and check the lower time frames as well, you can tell the amount of indecision, like bullish and bearish signals. The market remains under the bearish influence ever since violating the $65,000, $45,000, of course. Excuse that. Continues lower. The breakout to the upside through $40,000, then rejection at $43,000. Well, another bearish kind of like a situation happens. Another moment, like somewhat of a breakout to the upside, short-term bullish advantage takes over. Then it fails immediately right after, and then the bearish continues. The bearish vote continues, and it's so much of changes, so full of indecision, so full of lack of this directional consensus. It doesn't promote any specific direction. It's very hard environment, right? I would not ever be sleeping well if I told anybody and advised to go and trade right here. So yeah, the market continues to chop around the main average levels at around $45,000. It chops around that. On lower time frames, it doesn't generate or promote any direction whatsoever, while the bears remain under control a little bit more than the bulls. So it's just I would say a very big question mark, right? And technical analysis is basically not, I should say, the best ally, not the best friend in projecting the sideways pattern resolve. Usually you want to see some direction, a breakout pattern, the pattern breakout or the breakout out of the pattern, in order to see some sort of like a direction to position yourself towards it. Well, finally, of course, this altcoin comparison. Here at the bottom of the chart, you see Bitcoin price action, the total market cap excluding Bitcoin, which is altcoins altogether in the black curve, and the blue one, which is DeFi. And you can tell there's lots of similarities, but overall consensus continues horizontally, right? There is no follow through to the upside, no follow through to the downside. Basically, the market, and the market trades makes a new high through the resistance, then it fails to hold the resistance. There is a support, it's supposed to bounce off the support, but it breaks through the support, then it bounces off, then actually recovers the support, and and the range continues to chop like this, right? Another breakout, another fake out, another breakout, another fake out, and so on and so forth. So it doesn't come out with anything specific. It doesn't promote any direction whatsoever, other than horizontal chaos madness with lots of noise, lots of very unfavorable trading environment, which makes people lose hope. And this lost hope basically translates to very negative sentiment. People, sending death wishes and very negative pessimism all over the place. Giving up on their bull market thoughts. But that is very, very interesting to see as the pattern develops. People get more and more bearish as they kind of like lose hopes that it's ever going to break out in either way. So you see the market, which keeps ascending. Bitcoin keeps printing higher highs and higher lows on average. I mean, $65,000, 2,800, 69.33. Higher highs and higher lows. It's an upward trend by definition, and people call this upward trend a bear market, right? So this is the psychology side of the trading, which completely distorts the reality perception. Very strong indecision. This is what I would call it. Lots of dark clouds, lots of very unstable environment, lots of triggers and signals which were not present for the past 20, 40 years. We're really talking, guys, about a situation which happens, this kind of a year happens once in four decades, once in 40 years, once in generation, once in 2 generations. This will always become more and more obvious in the hindsight, of course, but we're really looking at something special. This doesn't happen too often. Needless to say that there is, of course, inflation soar, like double-digit inflation across the planet as the new norm, 5 times over the expected or the planned 2% inflation rate. It's a lot of strange things going on with the war, Russian-Ukrainian war going on into well over 60 days already. The world seems to already have forgotten about that, right? So it's super strange days. I really hope you guys are staying safe out there. And finally, I want to remind that there is this 100th celebration. We are celebrating the 100th newsletter issue, free newsletter, which we have on a weekly basis, free market insights, the best peaks, the best tips, the best news out of the market, free of any charge to anybody who wants to sign up. And we're celebrating our 100th issue, where we can win $100 worth of Bitcoin, paid in Bitcoin, for lucky winners. It's like buying Bitcoin cheap. And on top of that, with tons of other rewards, guys, if you're ready to take part and give yourself a chance to win this and discounted memberships to the Birb Nest with tons of free useful content, just make sure you get this very giveaway going on, right? This is pinned under the Birb Nest account, the Birb Nest account, and it's pinned tweet. Make sure you go ahead and take part. The only thing you need to take into account is like, retweet this tweet, join with the link here for the newsletter, and comment down, just like tons of people did, right? Highly encourage everybody to go ahead and do it. Try your luck. Guys, all that being said, I'm putting myself here to finish off this webinar. It's a little bit over 30-minute long, as I got some technical issues before the start of the show, so I decided to kind of like get you some premium, get you some tip on top of that, and extend this webinar. Everybody, I hope you enjoyed this. If you did, please make sure you subscribe to our YouTube account, to the YouTube channel, the Birb Nest. This is our official channel. If you're watching that on YouTube, make sure, again, you subscribe, you hit the thumbs up, leave some kind comments, hit the thumbs up, as well with the notifications bell, so that you stay tuned whenever we update you guys with new videos, with podcast episodes, with tons of useful video reports and analysis coming your way, free of any charge. Do it. See you guys in the nest anytime soon. God bless you all. Stay safe. Bye-bye.